And right there, I've shown you a couple of effective and highly profitable trading strategies for scalping and for day trading. Welcome. In this video, I'm going to be showing you a couple of ways you can use for timing your scalping or your day trades. All right, let's go. And there's going to be a bonus at the end. I'll show you another way or another variation. So let's begin here. What we're trying to find out is there anything on the charts? By the way, this is the S&P 500, 30-minute. And the question is there any way we could have entered here or somewhere here? And for scalping, giving us this opportunity to ride the S&P 500 higher. And the answer, of course, hence the video, is yes. So let's go and save some time here, not waste time. First, let's begin by establishing the RSI here, which is set at 26. Which I use for small time frames. So what we're going to do is we're going to draw a line that connected prior highs, as you can see. And now notice how we broke out. I call this a Swedge breakout. And I've talked about the Swedge breakout for many years. That in itself is an entry right there, based on the breakout above the blue line. Now, something else I always talk about is the need to extend your lines. By extending the line, we get the first entry. It is this uniform activity right here, below the line, back above it. As I always say, that is a trap whenever you see uniform activity. In this case, it is support, which gave you this entry right here. And that is your first entry in terms of a potential day trade entry or a scalping situation. So that's one way to look at it. Now I'm going to show you a little bit of an advanced method with the same conclusion of how we can find this entry right here for scalping purposes. What we're going to do is use the RSI level as drawn right there. Now, by the way, I should mention this blue line happens to be around RSI 61.8. And this is something I also talk about a lot. What we're going to do is understand why this line is reliable. We can see that throughout the process here, and you can see that pullback there, but you can see that on this 30-minute chart, this is where the S&P 500 has been responding to for swing trade opportunities. In this case, most of these were down, if not all of them. Every time we are rejected on this line, the market would pull back. And again, here, the same thing. And even we can say here there was a slight pullback for scalping purposes. Now, you can see what I'm getting at. We had a double bottom support right here. We tagged it twice for the lows right there. And once you observe that double bottom, it is telling you that it is time to take a scalping trade to the upside. Now, as promised, let's take a look at a bonus way of looking at this. Now we're going to take a look at the same S&P 500 30-minute chart right there, 30 minutes. And now we're changing the RSI to the default, which I bet most of you are using, of 14. And let's go to this time frame here, and we're going to use the previous line, which is what I call a Swedge breakout. Links are going to be in the description. Back to YouTube videos explaining this method. Now, take a look at this breakout here on the 14 RSI setting. Again, we get that entry. And what we're going to do this time, again, is extend our RSI line. And you'll notice now we got confirmation. We got confirmation here, uniform activity below the line, back above it for a re-entry somewhere there. And then we have again our double bottom support, which we had seen. This time it is bouncing exactly right there on the 14 RSI setting, giving us an entry possibility right here for scalping purposes. Now let me give you another bonus confirmation that most recent bounce was consistent. If you take a look at this line here connecting RSI lows and extend it, again, you see that it was confirmed that this was a double bottom support based on the RSI only. And of course, you can add other technical aspects, but you can see there that confirmation, which again was confirmed by the prior line as seen right here. So sometimes confirmation is preferable as opposed to getting only one line giving you that signal. Now let me give you one other bonus of bonus in this video. Right now we see the market has moved higher, and we are using this RSI 14 on the S&P 30-minute chart. Moved higher, but you can see your technicals are starting to point down here. That negative divergence is something to consider, especially as soon as the RSI drops back below 69.1. And I talk about this as the second most strongest negative divergence. Remember, links are going to be in the description back to other YouTube videos explaining this. Right now, the RSI is at 70.40. But I would be looking for a rejection, more so if the RSI is rejected back below 69.1, then there would be a day trade or a scalping situation for a pullback on the way down. And right there, I've shown you a couple of effective and highly profitable trading strategies for scalping and for day trading. And so it is.